I really appreciate being here, Rob. Appreciate your leadership as the chair of the Arkansas Bankers, and it was also neat. I got in about an hour ago and got to see Kathy and Dave and Sean, three former chairs that I know. So to all three of you, wherever you are, I know Kathy's here, and Sean and Dave, thank you for your previous leadership as well, and really appreciate the warm welcome. So what I wanted to do, we'll leave some time for questions, and we can go into any topic that you would prefer. But first, I wanted to talk a little bit about the legislative and regulatory environment. So we'll take a few minutes there. We'll talk a little bit about technology, fintech, and some things that are really important for our sector that we're working on at the ABA. And then third, we're going to talk a little bit about 2020 and what we see there and how we're trying to impact the outcomes in a way favorable to the U.S. banking sector. And then I'll take any question on any topic. So thank you so much for being here. I know you had a panel yesterday on cannabis that Dan, one of our executives from the ABA, participated in, and I heard it was a fantastic panel. And I'll tell you, I'm not surprised at all. Just in the last 2 or 3 years, this issue has gone from kind of an issue on the periphery to front and center. You have 33 states that have legalized cannabis in one way, shape, or form. It's going to be, folks, on the ballot in 10 more states next year. Every time it gets on the ballot, it passes. So we're going to be at 43 states, likely at 43 states at the end of next year. And putting aside the societal, cultural, and moral implications of this debate, which is a very important one, you know, we respect what these voters have done in these 33, soon to be 43 states, and it's banks who have been caught in the middle, as everyone in this room knows. And there's inconsistent law, and there's reputational, regulatory, headline risk associated with banking cannabis and these secondary relationships as well. So even banks that won't get into banking a grower or a dispensary, but that want to maintain that relationship with a secondary business, the electrician, the plumber, the attorney, the accountant that does business with the cannabis entity of one way, shape, or form, that banking relationship in many cases is at risk, which is why we're pushing so hard and working with all the state associations across the U.S. to pass the SAFE Act, which would provide for a safe harbor for those important relationships. Obviously, we were really heartened to see the action in the House just a couple of weeks ago, where they did something bipartisan, by the way, which we think is really important. There's almost nothing happening in Washington that is bipartisan, and the fact that our issues are bipartisan, we think that is really important. We actually are trying to make banking bipartisan again. For decades it was, up till Dodd-Frank, which was, of course, a highly partisan piece of legislation, but we are really deliberately and intentionally trying to take partisan politics outside of banking. You know, the intermediation of capital, the deployment of credit, it's not a Republican or Democratic event, it's an economic event. So we're excited to see that big bipartisan result. We're turning our efforts to the Senate now. We've had a number of conversations with Chairman Mike Crapo, he's a Republican from Idaho, and a number of other members of the committee to take the base kind of contours of the SAFE Act, add provisions to it that will generate additional bipartisan support for the Senate, and try to move it out of committee by the end of the year with a goal of passage of that bill or probably early to mid-spring next year. Because if you go too deep into 2020, an election year, it's awfully hard to get legislation done. But again, that's exciting, that's bipartisan. We're happy to see that advance. Number two, on the legislative and regulatory front, I'll take a second on CECL. CECL, of course, is this accounting standard that the FASB has put forward. It's, in my humble opinion, a solution in search of a problem. We really think this standard is pro-cyclical. So we think that in the future case of potential deteriorating economic conditions, we think this would actually make them worse. We think it is a pro-cyclical accounting standard. FASB, for the better part of 2 years, has told us, the banking sector, and perhaps many of you in this room, that we're just making a mountain out of a molehill, and the bankers are overblowing the potential economic consequences associated with this accounting standard. So for 2 years, they basically told us to pound sand, but just not long ago, a couple of months ago, they actually blinked. They blinked and they exempted some institutions from CECL and then pushed out ahead of the implementation calendar for others. So I think that demonstrates that our arguments are resonating, because I don't think they would have done it if our arguments were not resonating. It's also another thing that's bipartisan. We have a bill on the Hill that would ask for this to be stopped, basically do a little timeout and do a stop and study and do a quantitative impact study to see if indeed this would be pro-cyclical and exacerbate a series of poor economic conditions. So, and it's bipartisan. We have Republicans and Democrats alike who are working with us on that effort, and we're going to keep pushing there. On credit unions, some of you who read news bites will see that we are continuing to push both in the courts and on the Hill a series of measures around credit unions. This is really, really important stuff, as everyone knows. I won't take a lot of time on the tax inequity that we're continuing to fight. That's really important. But one of the things that we're doing, I think a lot of our opportunities in the near term will be in the courts. Congress has not demonstrated a lot of courage in terms of wading into what is the big kahuna issue, which is the fact that a number of these credit unions are acting like large corporations and thus are not taxed like large corporations. In my home state of Washington, for example, which is a state with a dynamic economy and all these global entities, you think Microsoft and you think Amazon and all these other firms, the largest depository institution in my home state is the Boeing Employees Federal Credit Union. That makes absolutely no sense. It's a large corporation. It should be taxed like a large corporation. That's how it's acting. So while Congress has not done a lot yet on the tax piece, we're going to keep pushing that. In the interim, we're tying them up in the courts. Anytime the NCUA, which is their regulator, acts more like a cheerleader, but it's technically the regulator, every time they promulgate a rule that we think is flimsy or one that can be challenged, we're doing so in the courts. So we have a big litigation budget and we're putting it to use. And we'll continue to push on the Hill, and obviously we're using the Hill from an oversight standpoint to call the every time the NCUA comes to the Hill, where we put very confrontational questions and ask these questions around taxation, around field of membership, around member business lending, et cetera. So we're going to continue that, as you would imagine. On CRA, a lot of C's here: cannabis, CECL, credit union, CRA. It's the 4 C's, I guess. CRA, the Community Reinvestment Act, that's a 40-year-old piece of regulation. And of course, everyone in this room well knows that the way banks operate today is sharply different than they did 40 years ago. So Joseph Otting, who's the comptroller of the currency, a good friend to your ABA and our ABA, has been single-handedly pushing this regulatory rule set forward. He was a 35-year banker, and he's seen CRA, in his words, weaponized against banks. He wants to change it. Everything from what qualifies under CRA to how do you look at assessment fields and everything in between. So the next step on that one is you'll see a joint rulemaking, probably between the OCC, the Fed, and the FDIC sometime this fall, with the goal of getting a formal final rule done perhaps by year end, and then probably implemented sometime at the either end of 20 or sometime early 2021 is my prediction, is my guess. But Joseph Otting, well, all 3 regulatory agencies are working on that collaboratively, the Fed, the FDIC, and the OCC. It's really Joseph Otting at the OCC who's been pushing really, I think, in a heroic way, this modernization forward. Because again, these rules that are 40 years old just don't reflect the way banks operate in our economy today. So that's exciting. There's also, on the AML BSA front, newly introduced bill in the Senate that we support that also has deep bipartisan support, which is very, very exciting. And that's another very older rule set that needs to be modernized. And for us, the way we view that is, and I was in the Treasury and the FinCEN bureaus within Treasury, and I can tell you that every banker I've talked to all across the country is patriotic and wants to do their best to ensure that bad actors are not using the banking system. I think we're all in heated agreement around that. We're all aligned. We just want to make sure that the millions of pieces of data that the sector is generating are put to good use, right? That should be the foundation of a reform around AML BSA, and also I think tailoring too. So in my opinion, if you have a small community bank with an ag book and maybe a small mortgage book, we may want to consider looking at that bank slightly differently than a globally active bank headquartered in Miami with a lot of exposure to South America. It's kind of common sense. So anyway, what's great is there's a bipartisan conversation around AML BSA reform. Which, again, when you look at cannabis, when you look at CECL, AML, BSA reform, the fact that these issues are becoming bipartisan for us, that's really important, folks, because bipartisan reforms are more enduring and more long-lasting. So if we can get Republicans and Democrats alike to agree on the important role banks play. That net will help our sector a lot in the years ahead. So we're really trying to be intentional to achieve bipartisan support when we can. We can't always, but when we can around our issues. So that's just a quick around the horn on a handful of some of the hot legislative and regulatory topics during Q&A. Happy to speak to any other. On FinTech, wanted to surface kind of three different things. First, I want to talk about RTP, real-time payments. There's been a lot of debate over RTP. What is RTP? Do we need RTP? And how should I think about RTP? So the Fed just recently announced within the last several weeks that they're going to create a set of real-time payment rails, and I think that's great. But in the interim, if I'm on the board of a bank or I'm on the management team of a bank, here's how we're kind of thinking about RTP today. Given that the Fed's made their announcement, it's great, but they've also announced that it is probably 4, 5, 6 years away from being deployed in the marketplace. That's kind of an eternity, folks. I mean, technology, the rapid convergence of banking and technology is happening right now. So acknowledging that the Fed is 4, 5, maybe 6 years away from building their set of rails, how should we think about it? Well, I'll tell you how we think about it at the ABA. We think that banks should consider the private sector option that's in the market now for the following reasons. And it's called real-time payments, and that's the largest 25 banks have pooled resources to put that together. But we've been working with that group because we've had a lot of, I think, tough questions for them. And I'll kind of walk through what those questions are and why we think the questions have been satisfied and why we think you should consider offering RTP through the clearinghouse if your customers and clients are demanding it, which I think over the next few years is going to happen. So one is the price piece. One of the things that we have talked to the clearinghouse about is to say, hey, well, there'll be a delta in pricing between a large bank, if they're an owner or not an owner, and a community bank. Because if you're pricing them differently, we don't think that's cool. So they've said, no, there'll be no pricing delta. Large and small will pay the same. We think that's important. By the way, that's important because the Fed charges community banks about 2 or 3 times what they charge large banks for ACH. So getting that concession out of the clearinghouse we thought was important. So the price thing is important, we think. The core piece is really important. I'll talk more about the cores in just a minute. But of course, even if you're a community bank and you want to offer RTP, if the core doesn't have it up and running, you can't. What's great is the cores have been very attentive to this issue and have been working with the clearinghouse. 2 of the 3 major cores, there's several cores, but 3 have roughly 80 or 90% of the market. 2 out of the 3 cores will have RTP deployable by the end of the year, they're telling us, and the third will probably be midway through 2020. So that's a good story. So you'll be able to deploy it. As the Fed's also thinking about building their set of rails, one of the things we've said is really important is the interoperability piece, meaning you have a private sector set of real-time payment rails in the market today that was built by this group called the Clearinghouse. The Fed system is being called FedNow, and when it's up and running in 4, 5, or 6 years, we want to make sure the 2 systems talk to one another seamlessly so that you could use whatever you want to use. So we're imploring both the Fed and the clearinghouse to, as you are building these systems, make sure they just work with one another. So if we have 2 different set of payment rails, we think that would be that won't talk to one another, that won't be seamless. We think that is a big problem. But one of the biggest things that we're looking at as it pertains to the Fed building their set of payment rails is who gets access to the rails. And this is kind of an existential thing. In their notice for comment, the very last page, and I read the whole thing, the very last page on the notice for comment when the Fed said, we're thinking of building a set of rails and we want comments from all these different stakeholders, they put a comment in there that said, should non-banks be able to have direct access to the rails if we build them? Folks, that would be a really bad thing if banks got disintermediated from payments. Any bank, small, medium, or large. That would be a really bad thing. So in our comment letters, we've said, no, we think it would be terrible for non-banks to have direct access to the payment rails. I'll tell you who wrote letters saying we would love access, direct access, and that's Facebook and Amazon and a whole bunch of tech companies who want that to happen. So there's going to be a behind-the-scenes battle over the next 3 or 4 years where our group, ICBA, BPA, all the banking organizations are going to be on one side, and you're going to have kind of fintech and some other groups on the other side. They're going to lobby hard for direct access to the rails. We think, so we're going to be monitoring that closely. There'll probably a lot of times we'll be calling on you in this room. I know you guys were just in Washington. I saw you last week. But in future fly-ins, this will be one of the things, one of the really important talking points that Lori and I are going to ask you to, deliver really acute messaging around this on future trips to the Fed, to talk to Mickey Bowman and Randy Quarles and Jay Powell and others. This is an existential thing. So if the Fed were to build a set of rails and allow non-banks in, I think that is very, very troublesome. So that's kind of how we're thinking about the real-time payments debate right now. There's something in the marketplace now. We think it's absolutely worth considering what's in the marketplace now. Your core will be able to deliver it soon, which I think that is great, and you're not going to have a price delta. And then in a future state, let's fast forward 5 years, there may be 2 sets of rails, and that might even drive prices down even more, which is a great outcome as well. What would be a bad outcome, however, is if the non-banks got in. That would be troublesome. So that's a little bit on payments. A little bit on non-bank charters. There's been a lot of conversation in Washington over the last 6 months or so about non-banks getting access to a banking charter. So the OCC, for example, has considered a non-bank charter for the last couple of years, and they've asked for our kind of opinion and our view on it. And our view is as follows. Obviously, getting a charter, you derive great benefit from that. There are many benefits to having a charter, but I think first among equals perhaps is preemption. So you're subject to one set of national rules and not 50 different rules. So let's call that preemption. Let's call that the dessert, right? So what we said to the OCC is, listen, if you want to give a non-bank a charter, they want to get that dessert. They got to eat their vegetables. They got to have the spinach. They have to be subject to the same duties, obligations, and responsibilities that banks are. They've got all of that. They've got to have the vegetables and the spinach if they're going to get the dessert. So I'm talking about CRA, I'm talking about capital, I'm talking about supervision, all of that. So if it evolves that way, which right now the OCC is in heated agreement with that approach, that they shouldn't have to do some of the duties or obligations that banks are required to, that they should do all of them. So if it remains level like that, level playing field, we're okay with the non-bank charter. But if it were to evolve where they get the dessert and don't have to eat all the vegetables, big problem. But right now it's kind of directionally moving the right way. There was one application that came in just recently to the FDIC for an institution called Rakuten. For those of you who don't know Rakuten, some call it kind of the Amazon of Japan. It's an e-tailer, right? It's an e-commerce company, and they applied for an ILC charter at the FDIC recently. As a general rule, we don't wade in at the ABA and fire off letters to yell at us saying, hey, we support this application or we oppose this application, but we sent a letter of opposition to this one. We thought it was very concerning. We looked at the corporate entity in Japan. It's really not a financial services company. It's like an Amazon. And our fear is that if the FDIC were to grant this foreign Amazon a bank charter, what's to stop them from, what's going to happen if actually Amazon asks for an ILC charter? And we think that is very, very troubling. Just like non-banks having access to, true non-banks having access to the Fed rails, we think like a large tech company getting a banking charter could be very, very troublesome. One thing quickly on the cores, we were deep in a dialogue with about 10 different cores to encourage them to do what they can to improve the marketplace so that community banks can innovate, and we're deep into the dialogue with them. And at our convention here in Seattle, in my hometown of Seattle, in about 3 weeks, there's going to be a big update on where the core committee is going, what we're doing, and what some of those deliverables are. So for those of you who are coming to Seattle, there's a big update coming. And for those of you ABA members, and by the way, thank you so much for being an ABA member of the my ABA, not the Lori ABA. We sent out an email a couple of weeks ago with kind of a status update of where things stood. If you didn't get it, just let Dan know, and we'll get that into your email box. But we think improving the marketplace around community banks and their relationship with their core providers so they can innovate, we think is incredibly important. And the conversations with the cores have been, at times blunt and honest, but I will say, in the spirit of the exercise, these institutions are coming to the table and have said, we hear you, let's figure out ways to work and solve this together. And there's a recognition that in some cases, it's the community banks are facing real challenges associated with their core providers. So that dialogue is off, moving in the right direction. Let me hit 2020 here, and then we'll go to Q&A. A couple things, even before the impeachment inquiry that's just launched upon us, things were getting awfully hot and testy in Washington. I think that's kind of a fair understatement. In the years that I've worked there, I've worked there a number of years in different capacities, as Rob articulated. This is about the most polarizing and political I've seen Washington since 1998, which was the Clinton impeachment trial. So recognizing that, we're thinking, how do we navigate next year? How do we think about the presidential race? How do we think about the House Senate races? So let me just take a second on each of those. And what impacts a 2020 flip could have on our issues. So first, on the presidential race, we will not endorse a candidate. The ABA historically has not endorsed a candidate for president. If I had to guess, the winner of the Democratic process, Democratic Party process, is probably Senator Warren. If I had to guess, I've been on record with my board of directors for about a year and a half saying I think it's going to be Senator Warren. Sadly, I think I might be right. That's not necessarily, it's not necessarily good on our issues. What will a general election matchup look like between these two candidates? I have no earthly idea. I'm done making predictions. I don't have any earthly idea who would win that race between Senator Warren and President Trump. I have no idea. So while we won't endorse, we will make sure the facts are straight. So if the banking sector is referenced during the presidential debates, particularly between the two final candidates, less about the primary debates, but when you have two final candidates, we'll set the record straight as needed. So without picking someone to run for president, we'll make sure that facts are used around our issues and around our sector. But the House and Senate is different. We are going to participate in the House and Senate races. And let me talk a little bit about what that's going to look like and kind of our rationale for why. And I know that one of the things Lori and I talked about is the real intention that you're putting around building your PAC, growing your PAC. I think that is so important. I think that work stream is critically important. And thank you for doing it. So here's a little bit about how we're looking at these things and what we're doing. So first, we have, because of you, thank you, yet again, thank you, we have one of the largest PACs in the United States, Bank PAC. It's like a $4 million PAC. It's literally one of the largest. It is because of each and every one of you in the room who has given. Thank you. We deeply appreciate it. One of the things we've done with the Bank PAC is actually looked at our giving requirements and really been thoughtful and thorough and deliberate about how we want to support candidates. So if we find someone, for example, French is a perfect example from your state. French, fantastic on banking issues. We're going to max out to him early in the cycle, shake his hand and say thank you. Alternatively, if we find someone like Senator Warren who is not so good on our issues, we're not going to give her any money whatsoever. In fact, we'll look to see if there's someone running against her who we could max out to. Even if that person, he or she may not win, we think that is really important to send that message. And then for that vast group in the middle that kind of talk a big game but don't really help us, we think we should sit on our wallet. We don't think this PAC donation should be automatic. Let's sit on our wallet and see if they actually support pro-bank public policy. And if they do, let's help them. But anyway, we've been growing our PAC and also being very intentional and deliberate about donations. It's your hard-earned money. Thank you. Another tool that we're working on, two other tools that we're working on we think are really important. One is something we're calling the Voter Education Fund. So in this post-Citizens United landscape, companies can give corporations, individuals, unlimited dollars to 501c6s, which is what the ABA is organized under the IRS. They can give unlimited donations that we can use, that are non-disclosed, that we can use to do ads basically for and against candidates. So we started doing this in the last cycle. We intervened in about 12 races. These are Democrats and Republicans alike, both the House and the Senate, for folks who had stood up and been on our side, had been on our side on a host of these policy debates, from Durbin to 2155 and everything in between. We're going to do a lot more of that in the 2020 cycle. And we're going to find, if there's a primary on the left or the right where there's a pro-bank, pro-business candidate running against a progressive, anti-bank candidate, we're going to intervene in that primary and do ads for the person who supports our issues. We'll do that in the general election as well. We'll do it in the House and the Senate, supporting Democrats and Republicans alike. And that has gotten a lot of attention, but I think it's a critically important tool that other sophisticated industries have used to bring people to Congress that understand the important role, in our case, that banks play in the economy to create jobs and growth and prosperity. So as important as the PAC check is, I think doing these ads for our friends and returning our friends to Congress like French Hill, bringing folks like that back if they get into trouble, if they're in trouble in a race, we think is critically important. Another thing we're working on too is our whole grassroots architecture. How do we mobilize, organize, and communicate with the 2 million women and men who work in our nation's banking system? You'll recall, perhaps, for those of you who studied politics, the Obama campaign, they did a masterful job of using social and digital media to organize and communicate and mobilize. So we're taking some of the lessons from that campaign, and we're coming up with a new ways to communicate, share information, organize voters, bring them out to the polls, and all that sort of thing. So more on that later as we get into 20. But again, we have 2 million women and men who work in the U.S. banking sector, and I don't think the ABA has done historically the best we can to share information, get the word out. So that's something we're working on really closely with Lori and her 49 counterparts. There'll be more on that later. But all of those things together, the grassroots organization piece, what we're calling the Voter Education Fund, the PAC, are just really important tools that Lori and I will have and be able to work on together as we go into the 20 cycle and political cycles beyond. I'm often asked what will happen with the regulators if the White House were to flip in 20. Again, so I'm not making a prediction it will. I don't know in between those two candidates who would win, or if it's a different candidate, if it's Biden or Bernie, between that and Trump, don't know who's going to win. Hard to make predictions. But what would happen to our issues immediately in a January 21 scenario with a different president? All is not lost, actually, because those regulators, a couple of which I mentioned, so Joseph Otting at the OCC, Randy Quarles, who is the top banking regulator at the Fed, Yelena McWilliams, who I did mention, who is the head of the FDIC, they have 5-year terms, and their terms go into about 2022 or 2023. So we will not lose the banking regulators that President Trump appointed the moment after the inauguration. Kathy Craniger, however, who is the head of the CFPB, would be dismissed 1 minute after a new president was sworn into office. But the other banking regulators would be there at least a couple years into either Trump's second term or the first term of a different individual. So that's good, because this current set of stakeholders, and I'm not trying to be critical of the Obama era appointees, but I'm telling you, Randy Quarles, Joseph Otting, and Yelena McWilliams are fantastic to work with. And I know during your fly-ins you've had the occasion to meet with many of these folks. These are really thoughtful individuals who are working with us, not to undermine safety, soundness, financial stability, or consumer protection, but just to get that pendulum right. It swung way too far after the financial crisis. Let's get it back to the center so that banks can do what they need to do, which is help customers, clients, and communities create jobs and economic growth. I mean, that's what this whole thing is about, the intermediation of capital and doing it right. Before I take questions, let me just say that it's been a real pleasure to get to know Lori over the last year. I know she's about a year in, and I have the pleasure of working with all 50 state association executives and not saying anything negative in any way, shape, or form about her predecessor, who's fantastic. but she has been a wonderful partner. And on all these key strategic issues that I've talked about and dozens of others that I haven't had time to mention, it's been a real delight to have a trusted partner here in Arkansas, and it's been just wonderful. So for those of you who were on her search committee, I commend you, and I say thank you. With that, I'd be happy to take any question on any topic. We've got about maybe 10 more minutes. So thank you so much for listening. I appreciate it.
If anyone's got a question, just raise your hand. We have a microphone here, right here in the back of the room. Thanks.
Yes, sir.
I'd be interested in your comments on risks and challenges posed by Libra and other cryptocurrencies, even fiat currency-backed cryptocurrencies.
Yeah, great question. Let's start with Libra. Libra, that was about the clumsiest rollout of any new product I've seen in Washington. Both all the domestic regulators and international regulators, hypercritical of Libra. I did a TV appearance on either Bloomberg or CNBC and was asked a number of questions. And my answer, and it's consistent today, is what do they know in terms of know your customer? What are they doing? In terms of anti-money laundering, what are they doing? In terms of consumer protections, what's their architecture or regime? They don't have a lot of answers for any of that yet. So Zuckerberg is the CEO of that company. Just today, it was announced about an hour or two ago that he's going to appear before the House Financial Services Committee on October 22nd or 23rd. I expect that'll be a very confrontational hearing for him, and a lot of really tough questions around those areas are going to be posed to him. So we have a lot of skepticism towards Libra specifically for those reasons I just articulated. In terms of other cryptocurrencies, when you saw in 2017, there was all this, overheated rhetoric about Bitcoin taking over the world, and it's gonna supplant the dollar, the RMB, or the euro as the next global currency. I think that's hogwash. Frankly, the regulators don't support that. There's been no consumer demand or take-up for it. Bitcoin right now and those other digital cryptocurrencies, it's more of a speculative investment than actually a way that people are transferring money from a consumer standpoint. So we're monitoring those very closely. So I don't want to be dismissive to the point where you think we're not keeping our eye on that ball. But right now there's been very little support or take-up for Libra or any of its earlier peers. But I think it's a great question. Others?
Rob?
Yes, Rob.
Would you maybe comment on the SAFE Act?
Yep.
The sense in the Senate where that might be right now,
Mm-hmm.
what kind of work it might require
Sure.
to push that through?
Tons of work. So again, there's about 35 or 36 co-sponsors already. So that's great. So a third of the Senate has already stepped forward and said, we think this should happen. Also, as more states, Rob, begin to legalize, those elected officials from those states are hearing it. It's interesting. There's people on the left and the right that have some concerns about it, so I'll kind of share a couple of them and then how we're addressing them. So on the left, a lot of the legislators in Washington are saying, okay, we totally agree with you on the SAFE Act. It makes all the sense in the world to fix the inequity between state and federal law as it pertains to banking. We're with you. But we think it should do more. We think there should be sentencing reforms that should be part of it, criminal sentencing reforms. We think that people whose third strike, they're in jail because of the third strike was about weed, they should be let out of jail. So there's some progressives and those on the left who want to expand it in a pretty big way that I don't think has support in the Senate. So we're cautious. We're not trying to be dismissive, but we're saying if you add all those things onto SAFE Act, there's no way we can get 51 votes. So we're being respectful of people who think there's a broader societal discussion around criminal sentencing reform. We think go ahead and debate that, Congress, but not as part of the SAFE Act. On the right, you have a lot of conservatives who just say, gosh, I just think it's a gateway drug and I just can't be for it, even if it hurts the customers and clients of banks. So what we're trying to do is address those concerns on the left and the right. What's been great is that one of the lead senators, who's Cory Gardner, he's a Republican, he's actually up for re-election. He's from the state of Colorado, which, like my home state, was one of the early moving states to fully legalize for both recreational as well as medicinal. Cory Gardner has a really good riff on this, and he says, listen, I'm opposed to legalization. I voted against it, but I'm a 10th Amendment guy, and the citizens of my state need, they spoke, and I need to represent them. And so while I don't think marijuana should be legalized, and I understand the societal, cultural, and moral debate around it, there are small business women and men in my home state of Colorado who are not getting access to banking products. And I've had hundreds of examples from my travels all across the United States of businesses that have seen challenges. So there's a little noise on the left, a little bit of noise on the right. We're trying to, as best we can, navigate right between there. We think keeping the SAFE Act about banking will advantage us in the debate. If we think the SAFE Act turns into a Christmas tree and people start adding all this other stuff on it, we think it'll fall over. So we're trying to keep it pretty limited. And then, Crapo, for example, is in a conservative state, Idaho, where there's no discussion of legalizing it. So he's the guy who's leading the debate in the Senate is in one of the rare states where it's really not a dialogue. So he's got some home state politics he's trying to navigate. And then lastly, and most importantly, is Leader McConnell. He's, of course, the leader of the Senate. He has some issues very parochial about hemp. So Kentucky has a whole bunch of hemp. All these folks who used to farm tobacco in the state of Kentucky are now farming hemp. And so hemp, of course, there were regulations, or there's legislation in the Farm Bill that implored the USDA to put a bunch of hemp regulations out. I'm saying it right, Dan, I think. And they haven't done that yet. So McConnell is getting a little twitchy. He's like, listen, I want my hemp farmers in Kentucky to be able to get all their regulations out of USDA before we do something else here around state. The good news is USDA is moving forward on this. So we have some parochial concerns that we're dealing with McConnell, which I think we can do thoughtfully. There's just some conservatives that have some views, some progressives have some others. We're trying to take care of those. But, I'm cautiously optimistic, Rob, that we can get this done because it's common sense. It's just absolute common sense. But again, I recognize that there are plenty of people who think weed is terrible. I've never seen, this is as a total funny aside. So I can talk about, banking policy. I can talk about credit unions. I can talk about anti-money laundering. I can talk about capital levels. And you get like 3 or 4 news stories. We utter anything about the SAFE Act, and all these publications that until about a year and a half ago I'd never heard of, like High Times and Daily Weed and Green Daily and Weed R Us or whatever, they're writing about the ABA like we're the greatest people ever, and they're like, I'm in the centerfold of like Weed Times. And I'm like, what the heck is that? Never, when I met with the ABA Search Committee 3.5 or so years ago, would I think that one of our top legislative issues would be the SAFE Act, but here we are. So, anyway, thank you. Yes, sir.
I assume that the ABA is monitoring the trend of credit unions buying banks.
Yep.
And, just to me, it's concerning that here, it's just, it appears to me as a deliberate attempt to blur the lines.
Yep.
And maybe take some of the pressure off the attempt to erase their tax-free status.
Yep.
Any comments on that?
So absolutely. So thank you for that question. For those who didn't hear it, just what are we doing? How are we monitoring this trend that has been accelerating to some degree of credit unions buying community banks, mostly small community banks? Yeah, it's awfully frustrating, annoying, deeply concerning to us. In fact, 2 states it's happening more than others. It's happening across the country. Florida and Michigan appear to be kind of the 2 hotbeds. We're trying to study, is there some incentive under state law to suggest why that's the case. It's also tricky. We've talked about it at our board, and it's hard to tell a bank, you cannot sell. You can't sell your bank. It's a hard position for the ABA and state associations, I would imagine, to take. Sorry, you can't. Oh, I know you want a liquidity event. I know you've all voted for it. And I know they're offering you 3 times what it's worth. But sorry, you can't do that. So what we're trying to do is reframe the debate to say, listen, this around the tax issue, that this is yet another way that they're trying to avoid paying taxes. But this has been it's really been, the pace has been accelerating a little bit. And again, it's also just infuriating, not just us, but elected officials in those municipalities who are seeking tax revenue, and then even more tax revenue evaporates. So it's, yes, we're monitoring it closely, and every time it happens, I get a whole bunch of angry phone calls from that particular part of the country. But we're trying to figure out what the right game plan is to push back on that trend. But it's a really challenging issue. The rest of the debates over credit unions, we have levers that we can pull and push, and we're doing that. But we've looked, you can't tie these folks up in the courts. There's no basis for that. And again, the foundational question, we can encourage a bank not to sell to a credit union, but we have no authority to say you really shouldn't. It's a really tough issue, but I appreciate you asking it. Any other question, any topic? Or Kathy, and then you, sir.
First, I want to thank the American Bankers Association for the commercials that were run on behalf of French Hill. I think that was huge for our state and helping get them
Thank you.
elected, so thank you. Also, I thought you just might want to mention, in addition to all the legislative things you all work on, that you all, the wealth of knowledge and contacts that you all have on staff that I know we're able to call and get help on lots of different items.
Sure. Well, Kathy, thank you for the plug. I appreciate that. For those of you who didn't hear, we appreciate the kudos around French Hill. I think he's fantastic. We both worked in the first Bush administration together, although he was in a more senior capacity than I. And then what Kathy shared is a great point for me just to take a second on, then I'll sort of get to your question. And that is, for those of you in the room that are ABA members, I know it's most of you, again, thank you so much. We deeply, deeply appreciate it. Whenever you have a question about anything, call us first. This is one thing I've learned in my 3.5 or so years is I'll go and I'll meet a bank CEO or a senior executive from a bank, and he'll say, "Oh, Rob, nice to meet you. You seem like a good person. But I only wish the ABA did X." Whatever X issue is. It might be a business issue, an operational issue, a compliance issue, an audit issue, a policy. I don't care what the X is. I only wish you guys did X. And I pull out what's remaining of my hair to say, we do. We have like 5 people working on X. So before you spend a penny, and the people outside of the hallway will be super agitated with me, but before you spend a penny on a consultant or a vendor, please call us, because I probably have 2 or 3 people working on whatever your need is. So please, please, please call the ABA. Let us save you the money. That's what we're here for. We're here to serve you. So please give us a call. We've got, a staff of about 350 people. So I probably have someone who can help you on whatever your acute need is. So please pick up the phone. It's also equally important if you could pick up the phone and call us and say, hey, I'm having a problem with X, whatever X may be. And if we don't have a work stream around X, that's super valuable for me to know too. That, oh my gosh, there's a new emerging issue I didn't know about. I need to create staffing around it, put some budget, and create a work stream so that the next time a bank CEO calls me, I've got someone who can help him or her out. So thank you for that. Sir, I've got time for one more, and it's you.
Yeah, my question was about the GDPR going on in Europe and the privacy laws that people are talking about in Washington, what the ABA stance is on that.
Yeah, thank you for that. We've got, I don't know, Dan, if this came up in the GDPR issue came up yesterday, or you're speaking later today. So Dan will speak to this as well. But yes, we do have a whole bunch of people trying to help banks comply with this. This is obviously a big hassle, headache, and burden for not just banks, but all sorts of other entities. So we do, feel free to call us. We've got, I forget exactly who it is, but we've got a team of people that will help you with whatever your need is there. But that's a good demonstration of the fact that there can be things that spread quickly across not just borders, the U.S. and the Eurozones, the bad public policy at times can go back and forth. It also happens in the states. So that's why one of the things that's so important is the partnership that we have with the Arkansas bankers and the other 49 states, and the alliance that we have together is when we see a flashpoint in one state, we can surface it, quickly debate, discuss it, and come up with a game plan for it. And that's one of the really powerful parts of our ABA and your ABA is that partnership together. Great example, my home state of Washington, the state legislature, at the very end of the session, so this just happened a couple months ago, very end of the session, at midnight, literally at midnight. And my home state is awfully blue, folks. So the state House and the state Senate are led, the finance committees are led by some pretty progressive folks, and in the middle of the night, without any notice, without any hearing, without anything, they put in a bank tax. And when they gavelled it at like 2 or 3 in the morning, it was in there in both the House and Senate budgets. And Jay Inslee, who was running for president, he's the governor of my home state, he's dropped out, he had no chance, but he signed it into law. So now we're working with the Washington State Bankers Association to upend that recently passed bank tax legislation in the state of Washington. Why? Because if we let it go unchallenged, another state that has a budget gap to fill will say, oh, look what Washington State pulled it off. We can pull it off. Now, that may well not happen here. I was talking to your lobbyists who work the State House for you, and you don't have a group of cohorts that would do that necessarily, but there's a lot of states that would. There are a lot of progressive states that are going to look at what Washington just did and said, man, I got to, and this is like a $200 million annual tax on banks. It's crazy. So anyway, that was a little meandering segue, but I appreciated your question. Thank you so much for inviting me. Deeply appreciate it. Rob and Lori, thank you so much for your leadership, and I hope you have a great conference.